Hello everyone, it's Mark here, and Tesla closed in the green today. So that's 2 days in a row that Tesla has been positive, which is of course another nice change of pace. The rest of the market also, not also, but the rest of the market was not green. So there's a little bit of a divergence there in favor of Tesla and some other names like maybe Apple, Google, and Microsoft, some mega cap names. So you can we'll take a look at why this might be, but first things first, let's take a look at the price action for Tesla. And there was a very extreme gap up. We're talking that at the intraday high it was almost $241 a share, and it completely sold off for the rest of the day. And let's go to a smaller time frame, and we talked about the possibilities of what the price action can look like. So the first thing we wanted to draw is that if there was going to be a very bullish move in the morning, it would go up. I thought it would stop around 236, just slightly above the 235 level, and it'll sell off. But it gapped up pretty strongly, but sold off quickly over the course of the first hour of trading. Honestly, it's not that surprising. When it comes to this type of market for the past month or so, and not even just considering Tesla, but considering the entire market, there is just not a lot of bullish positioning, and most people, I would say the overall gamma exposure is very, very negative. And so whenever you have these pops in the morning, hopefully you're not surprised when they sell off completely. And the reason I kind of drew this green pattern is that when it's going up, I think you have to tell yourself, this is the point where I enter my short or enter my hedge in and just ride it out, because the overall sentiment in the market is still very, very unfortunately negative. There's really not a lot of great economic news that's going to really be a catalyst to send this market to all-time highs just yet. And is there anything that's going to really come out this week that could really change the makeup of the market? And most likely not. Like you might have some clarity when it comes to the interest rates over the next year and a half. When Powell speaks at Jackson Hole this Friday morning, you're going to have results tomorrow night from Nvidia that will give you kind of an idea of how the AI trade is really faring. But the thing is, Nvidia really is the only real AI name. You're finding Tesla's kind of trying to regain that kind of like follow the movement of Nvidia. I would say today, thankfully, it didn't really do it step for step, because Nvidia did sell off much harder than the rest of the market, and it closed deeply in the red. But it had a great day yesterday. So if you consider both days, Tesla and Nvidia are doing relatively decent compared to maybe some other tickers, especially like those in the finance sector right now. So we had that gap up in the morning, and it completely sold off, and it was a really big sell from 241. I hope I didn't get a perfect entry for a hedge. I got mine in at around $239.50, and I didn't get it on the first sell. I actually got it when it topped out over here. So I would say, oh, actually it's around 238. So I think I got it at 238.50, not 239. And I held 3 shorts, and I still have them. Basically, they're going to be my hedge into tomorrow. And depending on how tomorrow looks, and if it follows what it could possibly do tomorrow, you might have more opportunities there to cover yourself. And I think that's what we really should focus on today. Is there wasn't that much just Tesla news that was going to really affect the price action. And that's kind of interesting, because we know that Elon went to Japan. We don't know why. He hasn't been there in many years, and there's no news to come out of that trip. So I know he went to see his girlfriend perform, but obviously it wasn't just, ex-girlfriend. Obviously there's more than that to that, and maybe it's just kind of touching base with Panasonic and seeing about potential manufacturing facility for batteries or a megapack factory. But I would love to get some communication from Tesla, and I think I've been talking about how we're not really getting that from them. And of course we can't expect that. We can't demand that of them. But ever since the earnings came out, there has been very little communication from the Tesla team leadership about the future. And there's so many things on the horizon but we don't know when they're going to happen. We don't know when groundbreakings are going to happen for factories. We don't know when country selection is going to happen for new factories. We don't know release dates for new vehicles. We don't know their prices, et cetera, et cetera. So, I mean, so you kind of have Tesla in that limbo of, okay, maybe a 30% drop from quarter two earnings would be good enough to kind of readjust how the market is looking at potential profits for next quarter and for the rest of the year. At the same time, what I really like to see is just some more details fleshed out by Tesla themselves to maybe get the stock moving in a direction that not only diverge from the rest of the market, but really put Tesla back to where I think it really should be. I think a 30% drawdown is just too much. But I know we did recover some of that percentage over the last couple of days. But looking at the chart again, so this was a drawdown from the almost 241 to a low of $229.50. Okay, so that was a very considerable drop. We're talking $11 a share, or about 4.6% intraday, as the intraday movement it was now. That would have been an amazing short. My wife caught that short. She had the gap up, and she sold her call at the open, like 3 minutes after the open. So it worked out pretty well. It was like an 800% movement on a call, and then she went short, I believe, almost immediately thereafter. The options were kind of weird. They weren't really moving in the way you'd really want them to, but it's just because the volatility on Tesla is very much manipulated to really favor people that are selling these options, and so they're not really exposed to much losses. So you might see, even if price was to sell, I mean, if the share price was to sell, and you would see like the volatility actually contract, and then your options aren't really moving the way you think something would move for like a 3-4% move. But oh well. So I'm kind of hedged going into Nvidia, and I think that's going to be prudent for us, because it's almost like you have to think of Tesla like a proxy, not just to the AI trade, but almost to Nvidia, that it's going to move very sympathetically. And yeah, it sucks because, one day Tesla is a car stock, automobile manufacturing stock, and it moves like it's a GM and moves like a Rivian. And another day it's an AI stock and it moves like Nvidia. And when both go down, it goes down. When both go up, it can go up. But at the same time, it can be really dragged down depending on how the market wants to see Tesla. And that's kind of like the levels of manipulation that you really have to go through if you're really like dealing with Tesla on a short-term basis, day trading, swinging shares for some days or some weeks. That those kind of gyrations in the market are really not organic, because of how the different forces treat Tesla. I mean, there's definitely a negative sentiment when it comes to Elon, and Tesla pays the price for that a lot of the time. But also at the same time, yeah, like it can be considered part of an AI bubble. And if there's an AI bubble burst tomorrow night, then Tesla goes down with it, right? And if auto workers are striking at GM and Ford, then Tesla gets to outperform them because they don't have the same exposure to unions like those OEM legacy manufacturers. But if interest rates stay high, then all car manufacturers pay the price for that, because customers are not going to be paying anywhere from 8, 9, 10, 20% for a car loan. At this time, most likely. Well, I have to assume a lot of the people buying Teslas, not majority, but maybe a good percentage, maybe 30 to 40% are paying cash to get these cars, because they come at a good discount based off. If you're really considering just the Model 3s or even the Model Ys. But when we drew the screen line, we figured that, I didn't know, of course we wouldn't know anything, but, I wouldn't assume the gap up would have been so large. We're talking like a $10 per share almost gap up, like from here, here's the close, into the open. That was a 4% move up. And that was actually a price that was kind of sustained in the pre-market for a while. So I just want you guys to know, so when the gap's up, just understand, and you've seen it happen before, it's going to sell. And it's going to sell until you see positioning, positive gamma exposure on a wide range of strikes and expirations. But every ticker is very, very much has negative exposure. And so it's just the way it is. And we'll look at some charts, like when do we get a switch as far as that exposure? When do we go to positive gamma? Probably not until September. But if you see the gap up, and this is why I drew that kind of line down, and it kind of lined up almost perfectly, it's a sell. And the reason why I drew it, because it's a sell into lunch. It's kind of like the Wall Street, they're de-risking for lunch. They'll sell into lunch, it'll come back up, and in my mind, it would stay flat for the rest of the day, and it kind of did. It did dip down a little bit, but it wasn't making lower lows. You kind of have higher lows, but equal highs. And we'll look at how the options evolved today for Tesla expiring this Friday. And you can understand as well how options are always going to affect this action. It always will. So it's something that you need to be aware of so you don't get overly bullish or overly bearish in those moments where the positioning of the market isn't really demanding it. So this is not too surprising. Now I have some ideas of what could happen tomorrow. Like if it was going to go up tomorrow, I think it would basically mirror the same high that we had today and then sell off again. And this line we can delete because it wasn't it wasn't exactly a non-participating rally, even though it was a green day. I wouldn't say it was a great rally. And we can get rid of the possible bearish scenario. And since it's following the green thing for now, okay, so I think this was a relatively good way to kind of plan out your trade, is to kind of in your mind or even on your charts to kind of draw out the scenarios that you believe the price action would follow. Now, how did I get to this point? I know in the last video, we just drew it really quick, but it's really just looking at the levels, and the levels are most likely to be respected. I think that since it's earlier on the week, I think that if it is kind of a bullish kind of move, getting to a level like a 235 made sense to me, but it wouldn't exactly stop at 235 because it's only Tuesday. When you get to like a Thursday or Friday, the levels get much more tighter as far as like how the market is respecting them. And you'll see like rejections even below the strike of the strikes of options, which are separated by $2.50 increments for Tesla, 235, 237.50, etc. So in my mind, I'm just basically just drawing these tops at levels, and a bullish move, like in my mind, like this was going to be, if this happened, like gap up in the morning or even a move up in the morning of 2%, and that's pretty big for Tesla because, Tesla's been suffering a lot. And so a 2% move into the green, I think that would have been a little bit too much for the market. And that would cause a sell if it was bullish in the morning. And I was thinking that the sell would be not into the red, but basically stay green all day, and maybe bounce off, maybe fill the gap in the afternoon and kind of get bought up. And it didn't do exactly that, but the premise was kind of there. So I figured the top would be around 235, so I kind of drew that. And then the next tops were here, and that was at 234. So basically, never really establishing the higher high throughout the day. And I honestly thought we would make lower lows throughout the day, like very slightly lower lows, but it was actually a lower low in the morning and then kind of higher lows throughout the day. But the premise is that it's not making the higher highs. And so I didn't want people to get overly bullish intraday, and if this pattern was holding, because if you look at Tesla's, and I think this is important, if you're watching Tesla's price action every day for years or months or something like that, you kind of understand like how Tesla will move and how when people want to be bullish, how does it move? And we can look at yesterday, for example, of that. It's a gap up and it's bought up, right? And the retracement would be what? Like the retracement is to get you out of a position. And then where would that retracement stop? Of course, it's going to stop at some type of quote unquote level. And that level is something that is going to be determined by previous price action, which would be this kind of consolidation over here. It would make sense that it would find a base and it does a double bottom. So it gets sold off, but it gets bought up a little bit. It tests the level again and it holds. That's where you go long again, right? That's kind of what, if you watch the price action enough, like how about here, it gets bought up in the morning, it sells off, and then it stays flat. So it's not like it's a mind reading. It's just that's the price action. Like, and remember, if I don't have the red line again, but if it was to gap down, it gets bought up a little bit, but it never closes the gap. So it gets gaps down, it gets bought up a little bit, it doesn't close the gap over here. Here's another classic example of it gets bought up in the morning. This is very similar price action to maybe today. Let me remind myself what it today looked like again. Okay, kind of. Okay, so we can we'll try to look at this chart for today's price action. It's a gap up and sell all day. And it finds, well, this is all day, but if it gets gapped up and it sells and then kind of stays flat. And here's a good example of that here on the 10th of August. It gaps up, it gets bought up a little bit and then just kind of sells all day. And then it just basically finds a level, respects it, and doesn't go above it. And that's how Tesla's price action can be. And here's another example. How about over here? This is Friday, August 4th. It gaps up, it sells off extremely into the red. It gets flat all day. So it's not like I'm not a mind reader. We're not predicting the future. It's just the price action it can repeat patterns in the past because the options exposure of Tesla is not really changing. It's very, very short. People are very short. People are not very hyped on the stock. So you'll see the price action just be similar because of options. Options really determine these kind of shorter trends. And it's kind of hard to get around a call ceiling or a put floor unless it's early on the week. So this move on Monday kind of makes sense because, the flows weren't heavy for Tesla. The week just started. We're far away from the expiration. Options are pretty expensive. So on Monday, you can kind of get away with this, right? And it kind of sets you up as for positioning for the rest of the week as well, where it's like, okay, we have a nice day. It's a nice move up. We're 7% up. I can buy some puts that are much cheaper because of that and much cheaper compared to Friday because of that, right? So you kind of have that kind of freedom earlier on the week, but as this week progresses, you're going to get tighter on the moves. The moves will get tighter unless the catalyst is somehow there where, I don't know, Nvidia guides up and they're actually seeing like 14 billion instead of 11 billion, or they get 14 billion this quarter instead of 11 billion and they guide up like another to 15 billion for next quarter or something like that. And then you'll see like Nvidia, the Qs, all the other AI quote unquote stocks move up in sympathy with that action from Nvidia. But it doesn't change the fact that even the rest of the market is just still really heavy with put exposure. So I mean, we're just gonna have to find out. But I think going in tomorrow, since I won't be able to make the video in time for Nvidia's earnings, so I can't prompt you guys to just remind you okay, it's kind of important to stay hedged until we have some clarity about the market, right? So how do we hedge that? And I think it's really like I said, how Tesla will be a proxy for Nvidia. And why does that matter? It's because if you want to hedge, shorting Nvidia might not be the best bet because you'll have, due to earnings exploding, the IV essentially pumping it up for Nvidia, it's not necessarily effective to short Nvidia to hedge your portfolio, because if the move isn't like 20% on Nvidia, and the thing is, it could be, and if it does move 20% down, fantastic for everyone who's short. Unfortunately, those options are so super expensive for me, so I won't be able to do that. The costs of those options are crazy. And so maybe it's not best to hedge your portfolio. If you think Nvidia is our drop, I think there's different avenues to short. Obviously, selling calls against your shares could be an option if you want to cap your upside. But like I said, Tesla is a proxy. Maybe shorting Tesla is the way you just want to hedge your portfolio, regardless of your positioning, regardless if you're heavy on Tesla or not. The Tesla short could be a reasonable hedge, as the options for Tesla aren't necessarily expensive as to something we're used to, like from last year, where they're very expensive for what they were. Now, a lot of people do get frustrated with these kind of like fake outs. It's like big gap up, a very considerable gap up into a sell. Like, how do we further explain that other than the positioning of the options and having so many puts in the system? Well, it's kind of like a hidden rotation. If you're not really watching bonds, and I've been talking about bonds a lot, it's that it's gotten to, bonds have gotten to the point where they're equaling the highs of yield that we saw last year. So about maybe 8, 9, 10 months ago. And let's look at TLT, and we can see a kind of a relationship from TLT. This is the price action for today for TLT and the candles. And in the orange line that we're comparing it to, this is just the S&P 500 using the ticker, the US 500 for that, because it's a kind of like an all-day trading thing. So I didn't want the chart to be all janky by just showing you the SPY. Now you can do this yourself. This is just TLT compared to US 500. And you can have this kind of as like another window in your charts. So you can kind of see, is there like movement? And I know that TLT has a lot of flows already. TLT has been getting a lot of inflows since the beginning of the year, but I think those people have been paying the price and entering on TLT a little bit too high. 92, 93, I think that's a little bit of a safer bet, because at least this equals the low that TLT had last year. Maybe it's a double bottom for TLT. But let's take a look at TLT firstly compared to the S&P 500. And you'll see in the morning, we have this gap up. Okay, so it was high. And it kind of just generally, you know, it was up and down all day, but it was a sell all day by the end of the day. So this is just generally a downtrend for the day, and TLT is the uptrend for today. So like when people say, and I've been saying this myself, if yields are going up, right, it could be pressure on equities for equities to go down. But you're saying to me, Mark, okay, all the yields were down today. Yields were down, the 10-year was down, the 30, the long bonds were down. So why are the stocks selling off, okay, when the yields are coming down as well? Well, the reason why the yields are coming down, this is like the weird relationship with it. It's like, okay, the yields were up yesterday. They're up bigly. And now they're down today, but the stocks are down today. And I've been always told that's actually opposite supposed to happen. Well, how do you move your position into TLT if you want to like kind of capture that double bottom if you think it is? How do you get into TLT? Well, you have to sell something. And what's a great way to kind of have almost the best of both worlds? Think about this. It's that, okay, so if I know there's a big event tomorrow, which is Nvidia's earnings, that can literally drag down the whole market. It's so big in market cap wise now, it doesn't even make sense. Or you're selling a couple $1 billion in chips, but it's so big. It will drag down the S&P 500. It will drag down the NASDAQ. So what if you just sell your positions and just sit into TLT? And that's what you're seeing. You're seeing kind of that inverse relationship. After the morning, as S&P 500 went down, TLT would get stronger and stronger and stronger and stronger. And so it's basically just inversing the S&P 500 move because there was a rotation into long bonds. I mean, it shouldn't be too surprising if you're tracking TLT. I think at 92, I was buying TLT for my wife's account just because, look, it's eventually going to get back. Maybe it'll take years, but there's no decay to it. It's going to provide you a dividend. And so it's not like you're losing out. If you're sitting in TLT, it just, yeah, you're just kind of, maybe it's an opportunity cost if you're buying TLT at 107, 108, 110, but at 92, maybe, but it doesn't mean it's just going to shoot back up, right? Like the only way TLT is going to shoot back up is if we get in a recession, and then people will just sell everything and get into bonds, trying to capture that yield, the highest yield, and that they can get. So we see the relationship. Let's turn off the comparison to the S&P 500 and just go for kind of a longer time frame on TLT. And then you're seeing here, this is on the day. This is the daily. This is a 1 day time frame, and you'll see that we almost equal the low for the yields, which this October 24th day kind of was round about the bottom of the market for a lot of tickers. I say that all the time, but so the yields actually got down there and got bought up immediately. Like it was a gap down, right? It was a gap down yesterday. You can see it here, gap down, sold off during the day. Now gets bought up bigly after on today. And it could be just because like, are we forming the bottom of TLT? It makes sense that you can treat this just as a simple double bottom pattern. It fills a couple of gaps on the way down. It cleans up the chart. do you just skyrocket from here? And it kind of lines up with some, pivotal data being the words coming out of Jerome Powell's mouth this Friday, and PC inflation next Friday. So, or next week. I don't know if it's Friday, but next week. So this could be lining up for kind of the same bottom that we experienced in October of last year, where it was the bottom hit, and we can just draw it up. It gets bought up a little bit and forms a local double bottom, and maybe you just kind of take off from there, something like that. Possible, something to look into. I know that this is a Tesla kind of channel, but we have to understand, why these moves are selling, and why these moves are happening, especially the sell-offs. I know it's kind of frustrating for a lot of people because they need Tesla to go back up. It's just not a want, it's a need, because the capital needs to return for some reason or what have you. I respect that completely, and I totally understand where you're coming from. But mega caps are doing decently okay today. Most of them were, relatively flat or strong. Apple went up and kind of held higher lows compared to the candles are Apple. So Apple kind of held higher lows, where Microsoft closed just slightly in the green, which is the orange line. Google was okay. I think Google's longer term pattern is actually very, very bullish, and Meta wasn't that great compared to the rest of the mega cap stocks. Let's look at the, actually, let's go to the browser and let's just look at the options real quick before we get lost through the charts. So looking at maxpain.com, we're seeing Tesla's options. Now, another reason for the sell-off is that Tesla traders are very, very bullish. Looking at the amount of calls, they're just, the open interest is just, they're all pretty much they're all out of the money, and there's a lot of them. Whereas the puts are not as much. I would say the open interest on these lower end puts, lower strike puts, are kind of skewing the put call ratio. Just so let's look at the volume, and you can see, if you're watching this during the day, I was like, all these people buying 240 calls in the morning. There was a lot this morning near the open, and I'm like, this is going to kill us. And it killed us because they're not going to pay this out. There's 151,000 of interest of at the 240, and then as the day went on, the 235 started building up. Great, we're going to get pinned between 230 and 235, or lower than 230, and kind of maybe they want their puts in the money, and they'll just start selling off Tesla tomorrow. And you'll see 220 or 225 tomorrow. Traders on Tesla or I don't know if this is retail, but they're very, very, very bullish. And so it's not too surprising where you get these. And this is why I like to respect the $5 increments or the $2.50 increments on Tesla's price actions, because people get very, very excited and they really like playing options, and Tesla calls don't really get paid out very much. Not that much at all. Let's look at the S&P 500 through SPY, and we can understand that, why things happen the way they did. I closed just above 438, and it kind of makes sense. It doesn't pay out all these puts, doesn't pay out the calls, which were piling up at 440 and 439. But let's just know that. Let's take a note of 440. 440 wasn't just a big interest today. It's actually probably the ceiling, unless options evolve during the week. Let's look at the expiry for the S&P 500 for Thursday. Sorry, for tomorrow, and you'll see that it's the 440 again. Now there is a lot at 438, so we might get pinned right until the after hours when Nvidia reports. So 440 is pretty strong on Wednesday. And you'll see 440 again being pretty strong, with a lot also at 438. So a lot of calls are developing within this area that might start pinning price just above 438 because there's a lot of puts there. And for Friday, you're seeing, once again, 440 having a lot of volume, a lot of interest, and the 438 as far as puts. So it's obviously going to change when data changes, or when Nvidia reports. These options and interest can change pretty quickly. But for now, 440 is looking like it's gonna be a tough one to break unless there's really, really good reason to. And we'll just have to watch and see. Let's look at the seasonality. I wanted to talk about hedging a little bit more. And looking at this chart from Equity Clock, you're seeing on this chart the return or the average return during the course of the year for the S&P 500, which kind of gives you an idea of how price action generally performs on average. So August is very much like everyone knows, August isn't that great. But sometimes going to the end of August and into the middle of September, you kind of see a little bit of movement upwards. So we are basically here. This could be right here. This could be maybe where we're at right now, maybe at the lows of the month. And best case scenario, some good news from Nvidia, some dovish words from Powell can get the S&P 500 moving just above 441 perhaps. And maybe into September, you can see a little bit more of a positive movement after a really brutal trading over the past couple of weeks for basically all tickers, but really, really bad for Tesla, obviously. Let's look at the VIX. So the VIX has a very, very, very bad summer. But as it gets into August, and as we know, the VIX is kind of staying around 17. You kind of see kind of that maybe representative in this kind of topping action here in the middle and end of the month, where volatility maybe explodes into the beginning of September, okay? And you can see it dip into the middle where this is kind of coinciding with the peak of the S&P 500 and then, selling off into October and means VIX rises into October. So what is another way to hedge? You can hedge with, going long volatility. And if you find a good entry, let's say the VIX was red today. Let's say the VIX is red tomorrow. You could maybe say to yourself, okay, maybe this is a good entry for me to hedge my portfolio by just going long the VIX. Some people do it with their UVXY, which is the leveraged VIX quote unquote ticker. It doesn't really move in the same way, so I don't really have too many comments on that. But you can go long volatility if you believe that you need a little bit of downside protection if Nvidia and Jerome Powell will send the stocks, sending all stocks just plummeting. So that's something you can take a look at. And let's go back to the charts to wrap this up. We'll take a look at the auto manufacturers. Here's Tesla again. So after hours, Tesla is relatively stable. Nothing too crazy going on after hours with Tesla. Let's just kind of figure, like, if it was to be a pretty bearish open, meaning if you see a gap down tomorrow, maybe that's more evidence of a de-risking for Nvidia's earnings report. So maybe you see maybe like 1.5% at the maximum. Maybe you see Tesla at around 230 to open on a bearish kind of move. Let's draw out potential price action. Maybe you're just a little above 230. And you kind of just sell off for the day and just kind of bounce. Maybe get into the gap, but nothing too amazing happens, perhaps. That could be a kind of a de-risk style price action, maybe. And then if there's a gap up, I don't know if there really will be. I don't know if there's real reason to gap up. I still think you kind of respect the levels that are being established, which is around that 235 to 240 area. And you find yourself kind of capped below that. Maybe you get a nice move for a day trade in the middle of the day and kind of selling off to close the gap during the day. If you see Nvidia bull really hard, you maybe get that kind of green line continuation. But it feels like a de-risk into the close kind of makes sense for Tesla, just because Tesla could be really vulnerable to a big downside move from Nvidia, and maybe people don't want that type of exposure going into Nvidia's earnings. But before we're looking at the auto sector, look at Nvidia and compare it to Tesla. You can see how Nvidia actually underperformed Tesla. It's getting bought up a little bit in the after hours, but Tesla remained flat, where Nvidia was kind of just really, really low. I mean, we're talking multiple percentage low, almost 3% on the day, from being up pretty considerably in the morning, making all-time highs. Let's turn off the Tesla chart and just look at Nvidia on a slightly longer time frame. And you have to ask yourself, are we seeing a topping pattern on Nvidia? Like, is this going to be a wick off distribution Was this candle here going to be what is considered the upper thrust after distribution? Is this just the wick-off distribution pattern playing out? And that will finish this pattern off by a really sharp sell to the downside, something like 15%, like into the 390s or 380s. And we can just draw that something like down there. And we'll look at the auto sector finally. And, we can see Tesla's still outperforming the rest of the tickers in this comparison. So the candles here are Rivian's candles, and Rivian is doing very, very badly, where Tesla actually kind of was opposite of their move in the morning. It was a gap up for Tesla and kind of just sold off a little bit, where it was a sell all day long for Nvidia, just brutal. And also, of course, the OEM manufacturers, Ford and GM, are represented in the light blue and the orange, and they're obviously suffering from the potential strike from the UAW labor unions. So that's going to be in September, and so you're basically seeing a de-risk from those auto manufacturers, because we don't know what's going to happen if they're actually going to strike and shut down production. And Tesla, of course, will benefit from that. And as far as why Rivian's moving down, I think this is basically because we've been seeing a lot of Cybertruck imagery videos on Twitter, or X essentially. We're seeing a lot of the media come out for the Cybertruck, and we know that Rivian just sells trucks. They sell trucks, they sell SUVs, and the Cybertruck could maybe be eating into those sales when it is released. So maybe that explains Rivian's price action, as it hasn't been doing very well, just like Tesla hasn't been doing very well. And Rivian has been selling pretty hard. Let's see how bad it is for Nvidia. I'm sorry, for not Nvidia, for Rivian. So they have moved from their high. Rivian's down 28.4%. So it's maybe a very similar move to Tesla. Maybe Tesla bottomed first, and Rivian is going to maybe make a move to the upside soon, unless the market just doesn't want to be risking being in this stock if the Cybertruck was to be released. And maybe if Cybertruck actually starts ramping faster than a lot of people think, maybe it's good to get out of Rivian for that. But also, if you want to go long EV, Rivian could be a proxy for a sharper move to the upside than Tesla, since it's lagging Tesla, but also it's a much more volatile stock. It's something to think about. All right, guys. So thanks so much for listening. A slight green day is better than a really red day for Tesla, and hopefully tomorrow maybe we can see a better green day. But if you see a very, very green day, think about your exposure to Tesla. Think about how you want to hedge your positions if you actually want to. Maybe if it's really, really red tomorrow, is that an opportunity to go long Tesla? Something to think about. Just respect this 230 level. If it makes lows below that too much, maybe it's not a great look for the stock, right? If it's closing below the 230s, if you're seeing the 220s, that's gonna be not so great. If it's too bullish in the morning, just know, like we know, if it's really high in the morning, it likely will maybe get sold off, perhaps. Okay, guys, thanks so much for listening. Hopefully the after hours action on Tesla doesn't go too crazy. I'm filming this at 6 p.m. Eastern time on the 22nd of August. All right, take care. Bye.